Official IRS confirmation that stimulus payments are arriving today. After months of uncertainty, speculation, and countless rumors circulating online, the wait is finally over. The Internal Revenue Service has officially confirmed that stimulus payments are beginning to hit bank accounts starting today. For millions of Americans who have been checking their balances daily, wondering if relief would truly come, this announcement marks a critical turning point. Over the past several months, many households have been living in financial limbo. Questions dominated kitchen table conversations. Do we qualify? When will it arrive? How much will we receive? Today, those questions are beginning to receive real answers. According to the IRS, direct deposits are being processed in waves, meaning some Americans will see funds immediately, while others may experience short delays depending on their financial institution and processing times. This is more than just a routine government payment. For many families, seniors on fixed incomes, and individuals still recovering from economic hardship, this stimulus represents immediate breathing room. It could mean catching up on rent, covering rising grocery bills, paying utility balances, or handling unexpected medical expenses. However, while the confirmation brings relief, it also brings responsibility. Understanding how these payments work, who qualifies, and what steps to take next will be essential in ensuring you receive every dollar you are entitled to. If this tone and format match what you're looking for, I will proceed with part 2 next. Who qualifies? Understanding eligibility requirements. Now that the IRS has confirmed payments are being distributed, the next critical question is simple: who qualifies? The answer, however, is layered and depends on several key factors that every American should understand clearly. Eligibility for these stimulus payments is primarily based on your most recently filed federal tax return. The IRS uses reported income, filing status, and dependent information to determine how much you qualify to receive. If you filed your taxes for the previous year, that data is likely already being used to calculate your payment amount. Income thresholds play a central role. Individuals earning below certain adjusted gross income limits qualify for the full amount, while those above the threshold may receive a reduced payment. Once income exceeds the upper limit, eligibility phases out entirely. Filing status, whether single, married, filing jointly, or head of household, also affects the calculation. But here's where it becomes especially important. If your financial situation has changed dramatically, perhaps due to job loss, reduced hours, retirement, or unexpected medical leave, timing matters. If the IRS is relying on older income data that no longer reflects your current situation, your payment amount could be different than expected. For seniors receiving Social Security, disability benefits, or veterans benefits, special processing systems are in place. In many cases, no additional paperwork is required. However, confirming your information through official IRS channels remains essential to ensure accuracy and avoid delays. Understanding eligibility is the first step in protecting your payment. How the IRS is calculating your payment. Behind every direct deposit now appearing in bank accounts is a detailed calculation process conducted by the IRS. These stimulus payments are not random amounts. They are carefully determined using information already on file, primarily your most recent federal tax return. The IRS begins by reviewing your adjusted gross income, or AGI. This number plays a central role in deciding whether you receive the full payment, a reduced amount, or potentially no payment at all. The lower your income falls within the qualifying range, the more likely you are to receive the maximum benefit. As income rises above certain thresholds, the payment gradually phases out. Filing status also significantly impacts the final amount. Married couples filing jointly may qualify for a larger combined payment, while heads of household often fall into a slightly different income bracket that may work in their favor. Dependents listed on your return can also increase the total payment amount. However, if you have not yet filed your most recent tax return, the IRS may rely on older tax data. That could mean your payment reflects income from a stronger financial year, even if your situation has since changed. For retirees, individuals who recently left the workforce, or families experiencing income reduction, this timing can influence the outcome. Understanding how the IRS calculates your payment helps set realistic expectations and prepares you for the next important step: tracking the status of your funds. Tracking your payment using the IRS Get My Payment tool. Once eligibility and calculation are understood, the next urgent question becomes, where is my money right now? Fortunately, The IRS has updated its official Get My Payment online portal, giving Americans a direct way to check the status of their stimulus funds. This tool allows you to see whether your payment has been processed, scheduled, or already deposited. For those receiving direct deposit, the portal may display the exact date funds were sent to your bank. If you're receiving a paper check or prepaid debit card, it will indicate when it was mailed. However, it is important to understand that payments are being issued in waves. Not everyone's status will update at the same time. Some Americans may log in today and see confirmation, while others may need to wait several days before their information refreshes. This staggered rollout is normal during large-scale distributions involving millions of recipients. Accuracy is critical. Before checking your status, make sure your personal information, including your social security number, date of birth, street address, and banking details, matches exactly what appears on your most recent tax return. Even small discrepancies can delay results. If your bank account has changed recently, outdated information could result in a mailed check instead of direct deposit, adding additional waiting time. Proactive tracking reduces anxiety and helps you plan your finances with greater confidence. Deadlines, tax implications, and the Recovery Rebate Credit. While the arrival of stimulus payments brings relief, it also introduces an important tax consideration many Americans may overlook. These payments are not simply government gifts. Technically, they are advance payments of a tax credit. That distinction matters when it comes time to file your next federal tax return. Because the stimulus is structured as a credit, the IRS will reconcile what you received against what you were actually eligible for based on your most recent financial information. If you received less than you qualified for, perhaps due to income changes, a new dependent, or updated filing status, you may be able to claim the difference through what is known as the Recovery Rebate Credit. On the other hand, if circumstances resulted in you receiving more than your calculated eligibility, current guidance suggests the reconciliation process is designed to ensure fairness, though specific repayment rules may vary depending on legislative updates. Timing is critical. If you have not filed a recent tax return, doing so promptly may be the only way to claim money still owed to you. Even individuals who typically do not file, including some seniors and low-income households, may need to submit a return to access remaining funds. Deadlines will apply. Missing them could mean forfeiting money that legally belongs to you. Staying informed and filing accurately ensures you protect every dollar available under the law. Beware of scams. Protecting your money and personal information. Whenever large government payments are distributed, scammers move quickly, and right now, as stimulus funds begin landing in bank accounts, fraud attempts are increasing across the country. That makes awareness just as important as eligibility. Let's be absolutely clear. The IRS will never call you demanding immediate payment. They will never threaten arrest, suspend your Social Security benefits, or insist that you verify your stimulus payment through a random text message. If you receive a phone call claiming to be from the IRS asking for your banking information, it is a scam. If you receive an email directing you to click a link to release your stimulus funds, it is a scam. Fraudsters often create fake websites that closely resemble official government pages. They may send phishing emails designed to capture your Social Security number, bank account details, or login credentials. Some even send prepaid debit cards that look official but require activation fees or personal data to access. The safest course of action is simple. Only use the official IRS website to check your payment status. Never share personal information with unsolicited callers. If something feels urgent, threatening, or too good to be true, pause and verify through official channels. Protecting your stimulus payment means protecting your identity. Once stolen, financial information can take months, sometimes years, to recover. Vigilance now prevents serious hardship later. The real-life impact. How these payments support households. For many Americans, especially older adults living on fixed incomes, this stimulus payment is not extra spending money. It is a financial lifeline. Rising grocery prices, higher utility bills, increasing medical costs, and property tax pressures have stretched household budgets thinner than ever. For some families, every dollar is already assigned before it even arrives. This payment can mean catching up on overdue rent or mortgage installments. It can prevent utilities from being disconnected. It may allow seniors to refill prescriptions without choosing between medication and food. For households supporting grandchildren or extended family members, it could provide temporary breathing room in an otherwise fragile financial situation. But beyond covering bills, the psychological impact cannot be overstated. Financial stress weighs heavily on mental health. Constant worry about whether the bank balance will stretch to the end of the month creates anxiety that affects sleep, relationships, and overall well-being. The arrival of this deposit, even if temporary, can provide a sense of control and stability. At the same time, it is important to recognize that this is short-term relief. It does not permanently solve structural challenges such as inflation, healthcare costs, or long-term retirement security. However, in moments of uncertainty, immediate relief matters. For millions, today's deposit represents more than money. It represents hope and a chance to regain footing, even if just for now. Broader economic effects. How stimulus money moves through the economy. While the impact of stimulus payments is deeply personal at the household level, the broader economic ripple effects are equally significant. When millions of Americans receive direct deposits at roughly the same time, that money does not sit idle. It moves quickly through local communities and businesses. Grocery stores often see increased spending within days of stimulus distribution. Pharmacies, utility providers, landlords, and gas stations also experience a surge in payments. Small businesses, especially family-owned establishments, frequently benefit from renewed consumer activity. For many struggling local shops, this temporary increase in demand can help stabilize cash flow and preserve jobs. Economists closely monitor these spending patterns. Stimulus payments are designed not only to support households, but also to stimulate economic activity. Increased consumer spending can strengthen supply chains, support employment, and generate tax revenue at state and local levels. However, there are also concerns. A sudden influx of money into the economy can contribute to short-term price pressures in certain sectors. If demand rises faster than supply, prices may temporarily increase. This is why policymakers continue evaluating how stimulus measures affect inflation and long-term fiscal stability. Still, for many Americans facing immediate hardship, the short-term benefit outweighs abstract macroeconomic debates. The money arriving today serves a dual purpose, stabilizing families and energizing the broader economy. Understanding this bigger picture helps explain why these payments matter far beyond individual bank accounts. Seniors, Social Security, and federal benefit recipients. For millions of seniors across America, especially those relying on Social Security, supplemental security income, disability benefits, or veterans assistance, one question stands out. Do I need to take action to receive my stimulus payment? In most cases, the answer is no. The IRS has established coordinated systems to distribute payments automatically to individuals already receiving federal benefits. If you receive Social Security retirement benefits, SSDI, SSI, or VA benefits through direct deposit, your stimulus payment is generally delivered the same way, without requiring additional paperwork. However, there are important nuances. If your banking information has changed recently and was not updated with the Social Security Administration or the IRS, delays could occur. In some situations, outdated account details may result in a mailed check instead of a direct deposit, extending the waiting period. For seniors living on fixed incomes, timing is especially critical. Monthly budgets are often carefully structured around predictable benefit schedules. A delayed deposit can create stress, particularly when medication costs, insurance premiums, or housing expenses are due. It is also important to verify whether dependents, such as grandchildren in your care, were properly reflected on your most recent tax return, if applicable. That information can influence payment totals. The key message for older Americans is this: monitor official IRS updates. Confirm your information is current, and avoid third-party assistance services charging fees. Your payment is designed to reach you directly and securely. What to do if your payment is delayed or missing? As deposits begin appearing across the country, it's important to acknowledge that not everyone will see funds at the same time. If your neighbor receives their payment today and you do not, that does not automatically signal a problem. The IRS distributes stimulus payments in batches, often based on processing cycles, banking institutions, and verification timelines. First, check the official Get My Payment tool on the IRS website. This should always be your starting point. The portal may indicate whether your payment has been processed, scheduled, or mailed. If it shows a mailing date, remember that paper checks and prepaid debit cards can take significantly longer to arrive than direct deposits. Second, review your most recent tax filing status. If you recently moved, changed bank accounts, or filed an amended return, those updates may still be processing. Even small address discrepancies can delay mailed payments. If the portal shows no information or indicates an issue, patience is often necessary. During large-scale distributions involving tens of millions of Americans, systems can experience temporary delays. However, if weeks pass without updates, you may need to explore claiming the Recovery Rebate Credit on your next tax return to ensure you receive funds owed to you. The most important rule is this: do not panic and do not turn to unofficial sources promising to speed up your payment. Official channels remain your safest and most reliable path forward. Using your stimulus wisely. Priorities for financial stability. Once your stimulus payment arrives, the next decision becomes just as important as receiving it. How should you use it? Financial experts consistently emphasize that while this money provides relief, it is temporary. Making thoughtful choices now can create benefits that extend well beyond this month. For many households, particularly seniors and retirees living on fixed incomes, the first priority is stability. That often means covering essential expenses, housing payments, utilities, groceries, insurance premiums, and medical costs. If you are behind on any of these obligations, catching up can prevent late fees, service interruptions, or long-term financial damage. Next, consider high-interest debt. Credit cards with double-digit interest rates can quietly drain your monthly budget. Paying down even a portion of that balance reduces future interest charges and frees up cash flow moving forward. Another powerful option is building or strengthening an emergency fund. Even setting aside a portion of your stimulus payment in a dedicated savings account can provide protection against unexpected car repairs, medical bills, or home maintenance costs. For those in more stable positions, this could also be an opportunity to review long-term financial plans, including retirement savings strategies or estate planning discussions with trusted advisors. The key principle is intentionality. This is not recurring income. Treating it as a strategic financial tool rather than temporary spending money can significantly improve long-term resilience and peace of mind. The psychological relief, money and peace of mind. Beyond the numbers, beyond the policy debates, and beyond the economic charts, there is a deeply human side to these stimulus payments. Financial stress is one of the leading causes of anxiety in American households, particularly among older adults living on fixed incomes. When every expense must be carefully calculated, even small unexpected costs can feel overwhelming. The arrival of a stimulus deposit can provide more than purchasing power. It can provide emotional relief. For seniors choosing between medication and groceries, for families stretching retirement savings further than expected, and for individuals worried about rising healthcare premiums, this payment represents temporary stability. Research consistently shows that financial insecurity affects sleep patterns, blood pressure, mental clarity, and overall well-being. When uncertainty dominates, it becomes difficult to plan for the future. A direct deposit, even if modest, can interrupt that cycle of worry. It allows people to breathe, reassess, and think strategically instead of reactively. However, the opposite is also true. Those who experience delays or confusion surrounding eligibility may feel frustration or fear. That is why clear communication from the IRS and trusted sources is essential. Transparency builds confidence. Accurate information reduces panic. In times like these, financial relief is not just about dollars. It is about restoring a sense of control. And for many Americans, especially retirees navigating rising costs, that sense of control is invaluable. Government policy, inflation, and the bigger fiscal debate. As stimulus payments move into millions of bank accounts, a larger national conversation continues in the background. These deposits are not happening in isolation. They are part of a broader fiscal strategy designed to stabilize households and support economic recovery during challenging times. Supporters argue that direct payments are one of the fastest and most effective ways to prevent deeper economic downturns. When families receive immediate relief, they can maintain spending on essentials, which in turn supports local businesses and protects jobs. In this view, stimulus payments act as a stabilizing force, preventing a ripple effect of missed rent, unpaid bills, and business closures. Critics, however, raise concerns about long-term consequences. They question how repeated government spending impacts the national debt and whether injecting large sums of money into the economy contributes to inflationary pressures. If consumer demand rises faster than supply, prices may increase, reducing the overall purchasing power of the very payments meant to provide relief. These debates are complex and often political. But for everyday Americans, like especially retirees and low-income households, the immediate priority is stability, not abstract fiscal theory. Still, understanding the broader discussion matters. Policy decisions made today could shape future stimulus programs, tax laws, and social safety net reforms. The current rollout may serve as a blueprint for how the government responds to future economic disruptions. In other words, today's payments are relief, but they are also part of a larger economic experiment unfolding in real time. Community impact, small businesses, and local support systems. As stimulus payments circulate through individual households, their effects quickly extend beyond personal bank accounts. Local communities often feel the impact within days. Small businesses, especially grocery stores, pharmacies, diners, and neighborhood service providers, frequently experience a noticeable increase in activity following large-scale government payments. For many small business owners, particularly those still recovering from economic disruptions in recent years, this temporary boost in consumer spending can provide critical stability. When customers are able to pay overdue balances, schedule postponed repairs, or make essential purchases, it strengthens local cash flow. That ripple effect supports employees, suppliers, and service providers throughout the community. Nonprofit organizations and community assistance programs also play an important role during this period. Food banks, senior centers, housing counselors, and veterans groups often help individuals understand how to access stimulus payments and avoid scams. These organizations serve as trusted bridges between federal programs and the people who need support most. For older Americans especially, community networks can be invaluable. Whether it's a local tax assistance program helping file returns correctly, or a financial counseling service offering guidance on budgeting stimulus funds, these resources reduce confusion and build confidence. Stimulus payments are not just federal transactions. They are community events. When used wisely and supported by strong local networks, they contribute to economic resilience that reaches far beyond individual households. Staying informed. What happens next and why it matters? As stimulus payments continue arriving in bank accounts across the country, this moment represents both relief and responsibility. While today's deposits provide immediate support, they are also part of a continuing process. Government agencies will monitor how these funds move through the economy, how households respond, and whether additional measures may be necessary in the months ahead. For Americans, especially seniors living on fixed incomes, staying informed remains essential. Legislative updates, tax adjustments, and future assistance programs could evolve depending on economic conditions. What happens next may influence retirement planning, healthcare affordability, housing stability, and future benefit calculations. This is why relying on official IRS announcements and credible financial information sources is so important. Misinformation spreads quickly during high-profile payment rollouts. Clear, verified updates help you make confident decisions without unnecessary stress. If you have not yet received your payment, continue monitoring official channels and ensure your tax and banking information is accurate. If you have received it, take time to plan carefully. Consider both immediate needs and longer-term stability. Today's stimulus payment is more than a deposit. It is a reminder that economic recovery is an ongoing process, one that requires awareness, caution, and smart financial management. Knowledge remains your strongest financial asset. Stay informed, stay vigilant, and use every available resource to protect your stability in the months and years ahead.